Remember, before GameStop ran to $500, it was on the threshold securities list for 39 consecutive days. That is right, AMC is currently on the threshold list for its 23rd day, and after I make this video, it's probably going to be the 24th consecutive day. And as many of you know, after 13 days, they are supposed to be forcefully covered on an open market. Adam Aron finally addresses this issue with a tweet. He goes, "Many of you and we are aware that AMC Entertainment has been on the threshold list for 3+ weeks, indicating a number of fails to deliver. Some of you may be pleased to learn that we have contacted both FINRA and the NYSE, asking that they both look closely at the trading of our stock." Now, first of all, Adam Aron, just thank you for this tweet, at least disclosing that you know what is going on. This is all we've been asking for years now, and all we've been wanting you to do for the earnings meeting and plenty of other times that we wanted you to address certain things. Now, I like this article that Webull put out, which is very surprising because they usually put out FUD. AMC CEO is in touch with the NYSE FINRA about stock staying in threshold securities list for fails to deliver. The entertainment company CEO Adam Aron took a Twitter Tuesday regarding the stock's inclusion of the threshold list for over 3 weeks. Threshold securities list is made available by the exchange, and it refers to equity securities that have an aggregate fail to deliver position for 5 consecutive settlement days, totaling 10,000 shares or more and equal to at least 0.5% of the total shares outstanding. Fails to deliver happen when one party in a trading contract doesn't deliver on obligation, or when a buyer doesn't possess enough money to take delivery of the security and for settling the transaction. It could also mean a seller, the one who has a short position, does not have all or any of the underlying security required to be delivered at the time of the settlement. Now, this is more likely the scenario. The company has contacted both NYSE, where AMC is listed, and the Financial Industry Regulatory Authority, which regulates member brokerage firms and exchange markets. Why it's important? Regulation SHO, an SEC rule formulated in 2005 to regulate short selling, dictates that brokers/dealers should immediately purchase shares to close out threshold securities if the fails to deliver persist past 13 consecutive settlement days. An FTD typically occurs in options trading or when resorting to naked short selling. Naked shorting is illegal, and it refers to shorting shares that may be bigger than tradable shares in the market. It is often deemed as manipulation in the market. Aron has repeatedly been criticized for not taking steps to protect the investors. In the past, Adam Aron had denied knowledge of any naked short selling in AMC stock. In quotes, "As to the existence of so-called fake or synthetic shares or the naked short selling of AMC shares, we are unaware of any information validating these theories. Also, we are unable to make any comment on the considerable trading of put/call derivatives," he said in a July 2021 tweet. Now, on top of that, a lot of people are getting hyped about Antera adding 4 million shares of AMC, and if you want the legitimate filing, here it is right here. They added through total return swaps an amount of 3.98 million. Could this be because they're bullish on AMC, or could this be because they want more votes going towards yes? Now, FINRA Rule 4210, margin requirements, describes the margin requirements that determine the amount of collateral customers are expected to maintain in their margin accounts, including both strategy-based margin accounts and portfolio margins. We've touched on this on the channel plenty of times before, and as you guys can see here, shout out Tony DeNaro, they have been continuously kicking this can down the road since 2016 for the adoption of this rule. You can see right here all of the updates. On February 24th, 2023, FINRA filed a proposed rule change to extend the implementation date to October 25th, all the way down here until March 25th, 2019, and this is just one screenshot that he posted. They are continuously kicking the can down the road. Hopefully this does not happen with the proposals that are trying to be passed right now by the SEC about best order execution and retail auctions. Speaking of kicking the can, Jerome Powell says the only way out is for Congress to raise the debt ceiling. Are we going to raise it once again and get ourselves out of this mess by making an even bigger mess? It seems like people in power, regulators, and the US in general loves to do that sort of thing. Now, don't worry, we are not done with AMC yet, but if you guys haven't, please hit the like button. I forgot to ask, and please hit the subscribe button. Today's video, we have a ton of AMC to go over, so moving on, Motley Fool, naked shorting exposed. Basically, I'm going to link this in the comments down below if you want to read through it. The Motley Fool basically put themselves in a position where they explained that they have been bashing certain stocks. They go, the fund may not be able to enter into short sales and may therefore not be able to fully express its negative views in relation to the relevant securities. Admitting to bashing stocks, they short like AMC in this paragraph. In jurisdictions where naked short selling is permitted, entry by fund into naked short sales may be exposed. The ILS strategy to increase risk of liability costs or losses suffered by the transaction counterparty or other relevant parties as a result of settlement failure. They basically admit naked short selling and short and distorting. Moving on, Credit Suisse has its own dark pool and prime broker for hedge funds when its 5 5-year credit default swaps exploded last year, it almost doubled the cost to insure itself when compared to 2008. Let that sink in. Today it's at 366.7. Yikes. This is the chart right here for the Credit Suisse 5-year CDS spread. The question here is, when recall hedgy loans to save their own skin? Because we all know it's coming very, very soon. Touching on AMC Ortex numbers, we finally hit 25.01% short interest of free flow, at least what's reported to us. Utilization is still currently maxed out, and the cost to borrow sitting at 243 for an average and 249 for a max. As for APE, 6.15% short interest, utilization at 84%, and the cost to borrow not being reported on Ortex. Now, before we jump into the charts, all I ask you guys to do is pop in the Discord. It's linked on the description. We have been making crazy gains in there, and if you don't want to miss out on a stock opportunity, plus want to talk back and forth with me on the daily, I'm always in Discord as well. Make sure to do that. Don't sleep on it. And also, if you want 17 free stocks by just depositing $1, my link will be down below for Mumu. As for AMC's chart, we have been tracking these cycles, and over the past few days, I have reiterated that I think AMC is going to come back up and test that $8.50 level, and I kind of wanted to just reiterate you what I'm showing. So if I grab this, take the bars pattern from what we have here, this is exactly what I see every time a brand new cycle starts leading into a peak. You see it right here, you see it right here. They all play out very, very closely, and finally you see it back here as well. A majority of these times, this thing either likes to rip higher or essentially get smacked and create another double top right at where it peaked at, and you can see the same thing happened right here. This is essentially something that I thought was going to be majority the case going forward. However, AMC is currently hugging this $6 level and really trying to hang on. Trading sideways on the day while the S&P 500 is bleeding is a good thing to see. If you guys haven't seen my Volkswagen comparison to AMC and will the market crash affect AMC's squeeze, make sure to go watch that. But overall, AMC, if it breaks down, I'm watching 550 for a bounce and essentially just trading in this channel. We want AMC to stay trading in this channel because it has been continuously making higher highs and higher lows, which is still a bullish thing to see. Nothing, absolutely nothing is invalidated just yet. If anything, we have very, very little volume on this sell-off, and it's not looking good for short sellers in general. According to Stock Tracker, AMC has 950,000 shares available to borrow at a most recent fee of 104.6%. Calls to puts, we are getting slaughtered. 16,000 calls compared to 70,000 puts expiring in the money. And guys, we have the vote conversion next week. Conversion and reverse split. The options chain is absolutely loaded up for calls and puts. However, majority are betting that this thing is going to be bearish following the meeting. What do you guys think down below? As for GameStop, this thing is just going to move with how AMC moves. However, it does respect this channel all the way that it's been trading in since back in January before the run to 500 when it actually exploded. I don't think we're going to break below either of these channels. If we break into the channel, I'm watching 1675 to 1650 as a bottom on GameStop. I don't think we're coming back to this old bottom at 1530. I think that was the lowest of the low that GameStop would get to, in my opinion. And essentially, I'm waiting for it to curl back up and get that major rip. Stock Tracker for GameStop, 150,000 shares available to borrow at a most recent fee of 9.3%. Calls to puts, we're getting slaughtered as well. Basically, no calls compared to 10,000 puts expiring in the money. Finally, the S&P 500, kind of trading sideways right now, up 0.22%, trading at $399.10. We got a bounce right around 397 on the SPY. After we ripped right below 400, we did not even get a bounce at 400. The SPY just tanked right through it. Looks like to me it filled the gap and it's basing off of this. This is not necessarily an invalidation because we are still trading in the parallel channels for the S&P 500. At this point, for a decision, I'm watching the SPY to break below 393 or break back over 404 to decide where it wants to go from here, and that is my outlook on the SPY. JP Morgan warns S&P 500 could plunge to 3,200 in coming months. However, what do you guys think? Do you guys think a market crash is coming even worse than 2008, or do you think we are jumping back into a bull rally? Plus, the inversion between the 2-year and the 10-year treasury yields has hit a record of 103.5 basis points. Last time this happened, a severe recession and unemployment surge in the 1980s. What is the scapegoat for this? Is it the AI sector? What do you guys think down below? Make sure to not forget, your portfolio isn't bleeding because of inflation. It's bleeding because of climate change. That is it, guys. Hopefully you found value out of the video or enjoyed watching. Make sure to use my links in the comments down below. Pop in the Discord. Don't miss it. I love you all. Lottery Stocks out.